This is Paul Donovan from UBS's Global Economics Department. Another day, another plunge in equity markets. It should be noted, for the benefit of the Nikkei amongst other indices, that just because we're about to have the worst economic downturn since 1982, it does not mean that equity indices have to return to the levels of 1982. Equity indice levels reflect an accumulated stock of wealth. The economic downturn is hopefully a temporary dip in the growth of that level of wealth. But not to worry, for Mr. Brown goes to Washington today, and the G20 group of economies meet to discuss the world crisis over the weekend. Anyone who has studied previous attempts at such international economic coordination will now experience the traditional sentiment on such occasions, a dull sense of despair. The idea that 20 world leaders, one of whom is President Sarkozy, let us remember, could come together to an agreement on international financial architecture in a single weekend is laughable. Or it would be laughable if it were not so tragic. The only thing that might help the situation is that political leaders are not really in control, and that includes Senator Obama. Financial markets are in control, and political leaders are doing what they are told by prevailing financial circumstances. Hence Comrade Paulson's wise capitulation on the structure of the TARP. As the program no longer deals with toxic assets, just bailing out institutions, perhaps a better name should be found. We would suggest the PDNP, the People's Democratic Nationalization Program. Meanwhile, a gentle popping sound may be heard in the Middle East, with the Financial Times reporting that the Dubai property market bubble may be bursting. Property prices are falling for the first time since 2002. The wonder is not that prices are declining. The wonder is that they didn't start declining before now. With economic data still so backwards looking as to recall a time when there was a lingering trace of optimism in the world, the corporate data flow is starting to provide some forward-looking guidance. At least, it's guiding economists. The world still waits for consensus earnings expectations to reattach their tenuous grip to reality. Intel warned of revenues 14% lower than previously expected in the fourth quarter as demand for chips weakened. U.S. retail chain Best Buy described their sales as suffering from a seismic drop. It's nice to see that companies are avoiding the hyperbole and confining themselves to a calm and rational assessment of the current situation. Where there is economic news of relevance, it's generally not terribly good. China's industrial production grew at 8.2% on the year in October, a long way lower than expected. There was weakness in electronics, which ties in with the Intel warnings overnight, China's electronics sector being generally aimed at the export market. This also says something pretty obvious about the health of the global demand. The problem for the Chinese data is that the negative surprises came from domestic demand. Domestic demand seems to be weakening faster than international demand for Chinese product. Steel production was the key reason behind the bad data. This does emphasize the need for the Chinese government to ramp up its domestic demand with fiscal policy, not because this will save the rest of the world, it will not, but to fill the void in terms of domestic demand and thus keep unemployment under control. We do get third quarter GDP data from Germany today. We don't really care. Third quarter probably saw another negative quarter of growth with minus 0.1% quarter-on-quarter, but the problem is not the negative growth of the past, it is the successive quarters of negative growth that lie ahead. Inflation is due from Italy and from France. Inflation is already slowing, but again, it's the risk of deflation ahead that concerns us. Slowing growth and falling inflation are, of course, an ideal time to be cutting interest rates aggressively. Perhaps Monsieur Trichet will have a Damascene conversion to economic good sense and start trying to mitigate the economic slowdown of Europe. Then again, perhaps not. That's all for today. Have a good day.